Are you ready for week 8? I am. And you are listening to the stockinvest.us podcast Trading Tips with Jim.
Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's trading tips with Jim. Win or learn, never forgive. Stack your
In last week's podcast, I said I thought it would be a green week. It is early Friday, market hasn't opened yet, but all three major indexes are down. Nasdaq down almost 2%, 1.88% down for Nasdaq, currently sitting 22,597 points. Dow Jones a little better, down 1.3%, while S&P 500 is down 1.4%. Everything is indicating a green day for the Friday, where the inflation numbers will come. I thought it would be a green week for various reasons. Anyway, I said I would use the week to buy shares because I believe we are close to a bottom. And so I did. I got into several new positions, increasing my exposure in the market after I offloaded when market was higher. For instance, I went into Dollar General, as I have spoken highly about for a few weeks now, just waiting for a good price, was able to get it just above $145 per share. The lowest I found it was $145.82. I got in at $146.25. Currently sitting at $148.56. So far in profit. I went on to buy American Airlines, which I also said are some stock which I really like. Got in at very, very close to what was low, $14.64 for American Airlines. But currently sitting at $14.05 means a slight loss. Then, as I said in last week's podcast, I wanted to get into or back into Tesla and Nvidia, and I hoped for a very good position for Tesla around 370. Never happened. Tesla was low at 384 and didn't go all the way to 370. And checking the stock, I didn't find it attractive enough to go in. So I'm still not in Tesla because I think it should tick further down. Currently sitting at 417, as I said. I believe strongly Tesla for the future. Even buying at 417, I believe in a few years will show to be a very, very good level. Then there is Nvidia. I was also hoping to get into Nvidia. I said I think a level around 150 will be very attractive, and I was ready to buy anywhere up to 160. Nvidia never got lower than 170. Currently trading at 186. So I decided I will not get into Nvidia either. I used the chance to pick up some Starbucks and Lulu shares, which I also mentioned last week. Lulu shares in a slight minus, but with the profit in Dollar General, it made for a 0 week so far. But indexes are green, so I hope that the end of the week, when markets are finished today, will show that I made the right decisions. In this week's podcast, you will get just my understanding of how I think markets, where they are, what to expect for the week ahead of us, which will be a shortened week. It will be Presidential Day on Monday, so it will be a no trading day on Monday, so only 4 trading days for Monday. And while I remember at stockinvest.us, we will have a very good offer for you during this week if you are interested in a subscription, that is. But I'm not here to push subscriptions on you. I'm here to tell you what I think will happen. The aim for this podcast has always been to try help you make better decisions, not by telling you exactly what you should buy or when you should buy it, but more giving you insights, which I hope enables you to do better decisions. And I told you, and you can even see it in the thumbnail of the podcast, you will see arrows up or down. every week tell you what I think will happen in the market. And after being in red for quite some time, while market was falling, I continued to be in the red. I posted green arrow last week, and I can already say that I will post a green arrow this week as well, meaning that for week 8 as such, I believe it will be a green week. Week 7, not finished as I said, but Nasdaq, for instance, has to go better than 2% to go into green. So it's a fair chance that it will end with a slight minus. The most important thing and the only lesson I can give you is that you should buy on red days, red weeks, red months. That's when you should buy, and you should sell in green days, weeks and months. That is how you will do your best trades. When markets are very high and I start to see, for instance, relative strength indexes start to get very high, or the buy and sell signals, which work so perfectly, so easy to follow. You can go to our stock page. You will find it for any market. I list them here usually every single week, so you know it. But such an easy thing to use. It is something called HOSE. It's just an overall feeling of the market. And in general, buy signals are increasing. After being quite low last week, Nasdaq, for instance, was down at 12. Currently up at 14, so increasing a little bit. Several stocks at Nasdaq has turned from negative to positive view. And all of you want to know what should I buy exactly the stock, and then you are either happy or you are disappointed if it doesn't turn out exactly as you hoped. I give you stocks which I think will do good, but there is one item where I give you my absolutely advice. It's in the $1,000 challenge, where I'm trying to grow $1,000 as fast as I can. Currently sitting at $3,485. And in the $1,000 challenge right now is only one stock, NEO. And NEO did fairly good over the week, but I expected that, and I argued why, because I've been arguing even this slow period now for NEO. I've been arguing why, because I see the risk reward as attractive. And last week or this week, so far being up, while most stocks and index is down. Making for $3,485 sitting in the $1,000 challenge. And at the end of the podcast, I will tell you what I believe is next for the challenge. I will, however, give you a few concrete tips today as well. Comes with very high risk, but I will give it anyway. But before doing that, I will tell you what I think, because this argues for why. This makes for all the reasoning why. And when you make an argument or a reasoning and you later evaluate what goes wrong, at least you have something. Most of you are trading on the gut feeling. You feel it's a good day, or you read something and you think it's a good day. Even listen to this podcast and you think, nah, and you buy. Or you sell. And later when you want to analyze where did I go wrong, you have no real substance to analyze. And how are you supposed to improve your skills if you don't analyze? And what I said and been saying for a long time is major trends. And I told you already from Christmas, I believe in consumer goods is a very good place to be. That is why I mentioned Starbucks. That is why I have a chip bottle, why I bought chip bottle, for instance, made 30% easy on chip bottle, why I say McDonald's, PepsiCo, all of these are good places to be. Just rewind podcast backs, you hear me say it. I believe that's the place to be, because I don't think market will be especially good first half of 2026, at least for sure not the first quarter. With that view, and I argued why I thought so, markets already being way high, has to have a natural balance, all these sort of things. In these arguments, I said that stocks with low risk will probably be consumer items, because these are the ones that have been beaten very hard, but show all the signs of going up. It's also where we first will start to spend money. And if you go into this, you have a potentially very nice upside with less risk on the downside. that balance out your portfolio, balance out your risk. And so far, turning out to be very, very good advice. Take McDonald's putting out very good results. Starbucks putting out results. These are doing very good. And last week showed that wages are growing amongst American consumers. The same thing is with interest rates. They are going down. It's cheaper to lend money. It's cheaper to pay your mortgages. And when you get more money, you start to spend more. First, you will start to spend more on your consumer items before you start to go to luxury items. So car industry, for instance, will not be the first to notice. It will be food shops, cafeterias, all of these things. But it comes with a slowness. But as these things, and you have to remember that professionals, they do just the same like I do. They try to be ahead of the changes. So they start to position themselves where they see the fastest and first growth, and then you later go to the items that will follow. And trying to bring a major argument why, for instance, I don't think this will be a huge fall and why I started to buy this week. I saw this natural correction and now I started to buy. The main argument is that there is no economic number supporting major crashes. What I think is happening and the reasoning why I think dollar will strengthen and all of these things is because US economy is going at a super strong rate. But you don't get the news because the news, they are biased, they present all sorts of things and seldom says the things that is actually there. So you have to follow more deeply in. For instance, last week's job numbers, they expected 60,000 on payroll. Some was down at 10,000 on payrolls. Comes in at 130, double as much as the most optimistic went for. Beating market by all means, and it has been for last half year, even before that, this has been the tone. Media is pushing out news after news about how bad things going to be. The numbers come in and they are way better than expected. Unemployment rate in the United States stays at 4.3%, for instance, expected to go down. Rules and regulations are being cut, and even EU. And again, have to go a little back. You heard me say that I believe US will have a decade of growth. Things can change, come midterm, come next election, etc. But in general, I think US, with the changes they have done, are settled for a growth. That goes for the entire Western, especially the Western part of the world, but even also Asia will grow. It will be, in general, a good time for world economies. US will be the first, the biggest, the strongest. Europe will follow because they are very slow and led by, now let's get into politics, but they are led by people, and they are led by people. Anyway, the thing is that the US is leading, as I said. Europe is just following. They say they don't, but they do. They do the same tariff, try to get into the same tariff deals. US did them first, then they try to get into the same tariff deals. US has been cutting rules and regulation by a super hard hand to make it easier for businesses to grow, to make it easier for you as a private person, reduce your cost for whatever it is. And now Europe is following. Ursula announced yesterday that, now EU will cut the rules and regulations coming years after US started with it under the first term of Trump, stopped it during Biden, increased rules and regulations again, but now Trump is cutting everything back. And in general, this spurs economic growth. So my general trend is that the West, especially led by US, will show super strong growth. I cannot see why things should collapse, meaning that I see a huge upside in the stock markets in general. But this goes in waves and it goes in trends. And right now I think there is a big offset with reality and what is presented as reality. Media is pushing out tons of news affecting stock traders, investors, they are overselling shares when they shouldn't be selling. They're overselling, pushing the market down. And it gets to unrealistic. Like pushing gold up to 5,500 was over. It was way over what you can expect. Same thing with pushing US dollars against euro up to 120. It doesn't have logic sense why. And sooner or later, things go back to the normal. So I cannot see any argument why markets should really crash heavily. But this is stock market. I've been so long in the markets that even what you think can happen. But usually when markets crash, the buy and the sell signals, which I start to mention, they get super low and things get over pessimistic and you have unnatural reactions. Now the signals are going up, indicating that the general trend underneath are slowly turning. The Nasdaq chart doesn't say all of it. It says that there is little support just under where it's sitting, so it can easily fall down to 21,000 points for Nasdaq, 21,500. Fairly possible. At the same time, volume is following the market in the last part, which is a good thing. So my bet is that what we see now in the market is overreaction. It is just news being pushed. People follow it, followed into gold market. Money got out of the stock markets. Now it's in the crypto world. There are scares, but these scares just offer buying opportunities. I will continue to increase my exposure in the market because I see it as a golden opportunity. May I miss 1 week, 2 weeks, 3 weeks, doesn't matter. If you bought 4 weeks ago, I still buy cheaper today. About buy and sell signals, across all the tickers that we analyze, 35% is giving buy signals, up from 31 last week. And most of them are up. Nasdaq to 14. New York Stock Exchange 36, was 33 last week. And London 36, Oslo 42%, Frankfurt 47%, National Stock Exchange of India 23, Tokyo 45, Shenzhen in China 40. All of these are on balanced levels. They are not too high, not too low. To me, it says that the best buying opportunity right now is in India, and it is at Nasdaq, selected stocks at Nasdaq. Which, by the way, brings me to two stocks which I think can have a huge potential upside, but you have to be very careful because here you go into the super volatility thing. Look at Big Bear AI down at $4.10, was up at $12 at the high, so down to a third, fall more than 60%. Only a third is left from the top. Then you have Rigetti down at $4.99, was up at 56. Also that is 1/3 of the real value. But these stock companies, they are companies that have been boosted by the idea that AI will change things. And it is natural when things are growing, you get to a point where it starts to fade off. And everyone feared the AI bubble. I don't think so at all, because I use AI every day in the business, in my private life. I follow it closely and I see how it is progressing. It's progressing much stronger than what you can get the feeling of right now. It was the initial boom, but the monetization is coming now. In the first period, everyone is just trying to grow the products, then they turn them into actually money value products, and I see that happening across all the things. Yes, a lot of the companies that is boxed on top of OpenAI, built on top of the cloud, these will get hammered because they have no absolutely real value, as for instance OpenAI, Claude, both of them now are going into the coding space, meaning that companies that build wrappers around this to be coding things will be hammered. They had their thing, they got their billions in valuation. Some of these will just fall apart, but some of them will live as well. But AI as such, income generation goes for Nvidia and the graphic cards, etc., will continue. This race is far by done. Saying so, and need for energy and AI and all of these things, supercomputing, etc., makes me believe that Big Bear, AI, and Rigetti offers good buying opportunity at current prices. But I wouldn't be surprised if Big Bear AI goes down to $3 per share. Seen this before, with when it turns, it will turn super rapidly. That is also one thing I have learned over all these years of doing this. Try not to hit the bottom. Try not. It's almost impossible. You will be lucky a few times. If you are a real chart reader like me, we have a fair chance because we are so used to charts. We will just look when the volume is absolutely peaking, when the volume is as high as it can get. That's the time when we sell. Or relative strength indexes start to get high, or the combination of them. It is when we have divergence, when stock prices are falling very, very hard, volume is going up, you get a divergence, you have a classic sell-off, offers the best buying opportunity. You should be very, very close to it. You can look at any chart, you will see this to be a truth with high significance. In 8 out of 10 cases, it will go the way that you want, and all you need to do is be more correct than you're wrong, meaning more than 50%. 51% correct in the things you do, you will make money if you are able to reduce your losses, that is, doesn't have the losses higher than the gains. And doing that, reduce your losses, is by following major trends. Have a plan, have stop loss, and all the things that this podcast has been mentioning for years. It's time to wrap it up. I told you that I believe, this was last week, I believe in Dollar General, American Airlines, Lulu, Tesla, Starbucks, Chipotle, Nvidia, 7 stocks there, which in my opinion offers good opportunities. I like to see Tesla, Nvidia lower before buying back myself. But these other Starbucks, Chipotle, should be a fairly okay game together with Dollar General, American Airlines, and Lulu. Then I added 2 more stocks for you just to watch. I have to admit, I already bought into Big Bear, AI, and Rigetti, so a little bias here. You have to put that into your consideration. I just see these levels as typical trade swings. And if you follow the podcast, and I recommend you to do, hit the like button, hit the follow button. You will know that I did the same trade in exactly Big Bear, AI, and Rigetti. Last time they had a huge fall. I made almost 50% on both of them in the shortest trade I had in a very, very long time. This time, not sure it will be the exact same, because last time they were falling in a little different pattern. But I have a feeling that I will manage to squeeze out a little profit from these. At the end of the podcast, as always, we have to talk about the $1,000 challenge. Trying to make a podcast every week to say something sensible is not easy, and I know what you want. You want concrete advices, you want the percentages. How much can you squeeze out if you go into Starbucks this week? How much can you squeeze out? You buy Starbucks now, $96. How much can I get by the end of the week? Assume you buy on, for instance, Tuesday. And by Friday, how much can I get into Starbucks? These are the things that you want to know. And I can, of course, tell you that, okay, I think it'll be 3%. Anyway, with the weekly podcast, it's very, very hard to follow up because markets changes and you have to adopt. That is why I give you the longer trend. But in the $1,000 challenge, I give you a stock. We follow it. I don't buy any new stocks before telling you first. As long as this has been around, getting to 1 year now, I believe maybe in August, September, it'll be a year. Absolutely not sure. Time goes so fast. But here, I try to give you a stock, and as I said, I don't buy any shares before telling you. I tell you first what I will buy. And after buying NEO, I gave you the things that I said I think will happen in NEO, which I think will happen in the electrical vehicle markets, of why I go in, because these have been overly hammered. And I have a huge personal stake in this. I've betted far more than a $1,000 challenge in this game. And so happy to see, for instance, today I saw that Rivian's Q4 numbers are exceptionally good. And other EV companies are showing the same thing. China is cracking down on the EV competition in China, because one of the reasons like NEO hasn't made money is because they try to gain market shares by selling cars cheaper and as cheap as possible, and a lot of cars have been sold with losses just to gain the market shares, to gain the brand recognition, etc. China is cracking down on it because it's hurting the business as such. But NEO posted the quarter earnings warning, meaning that this Q1 they expect to be the first quarter ever to go in profit, mentioned last week. I was in NEO a little early. We got in at 5.1, was up at 7 or something like this, and I said I will stay in it because I don't know exactly how it will turn out. I told all of you when we bought NEO that I believe it will go up to close to 8, and if it gets close to 8 you should sell. In the $1,000 challenge, I didn't sell. You can argue that to be stupid maybe, because it fell down even, I think, to 420, even 380. So it should, but when these things start to move, they move very, very fast. Now it does move fast because markets are slow. Currently sitting at 495 makes for a 2.94% loss since it was put into the challenge, but it has done what it was supposed to do. Reduce the downside risk, tiring, repeating all of these things. But as I said, I believe it's a good chance, a good stock, and if markets go so sideways, I don't think NEO will fall as hard as the other, while it has this super upside. I still sit in NEO. The $1,000 challenge will still sit in NEO. I think NEO will just continue to tick upwards. Why shouldn't it? It just gave warning that it will get to a profitable quarter, and they have passed more than 1 million cars produced. Electric vehicles are coming back, the batteries are getting bigger, the world and the future is not fossil for sure. Fossils will be there, but EV will. And while many big companies like Volkswagen, Ford, all of these started to go into EV, they never completed the job. They had to go back as it got overhyped, voked, and you had a natural crash down. So Tesla and these Chinese have very strong market shares. The big ones, Ford, Volkswagen, all of them will come as well. 27 minutes, time to end this week's podcast. When you get back next week, I hope your portfolio will be way greener than it was this week. For sure, I hope my portfolio will be a lot greener. I think it's a fair chance. We'll see. I'll tell you when I get back next week, which will be the last week before I'm heading off to Zanzibar for a few weeks. Until next week, just have a super week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.